Hey everyone, my name's Andy. I'm from the Finding Value Finance channel. Today we've got Patrick Karim with us from North Star Bad Charts. Thanks for coming on, Patrick. Really appreciate it.
Man.
And I wanted to bring him on. I was looking at his Twitter feed there, Bad Charts 1, I think, if you want to follow him. And he posted the 10-year and 30-year yield. And we had a breakout chart. I think it was on a 4-hour time period or whatnot. It was a shorter time frame chart, but it was breaking to the upside, looked really nice. I wanted to bring him on just to get his viewpoint on what's going on there.
It's always fun talking with you, Andy. If they only knew that we talked like an hour and a half before recording this, right? It's crazy.
I know.
It's crazy. So, all right, guys. So let's pop this up first. Okay, I'll do the first one I did before, because I got a little while back. I did this post here, guys, and this is a 2018 bottom, and I'll tell you why this is important, because I had the way gold's breaking down like below 3-year moving average and a rising trend line. I think we're more close looking to the 2018, where there was the same type of rising trend line, and then in 2018 it went really down until in bottom in August, and then after that it started pricing in easing or something. I think the market started having issues. So here's the bottom on the 30-year divided by the 10-year on the 4-hour chart. And 30-year goes down, the underperforming the 10-year. Here's gold putting in a top in 2018. Here's the 2018 breakdown, goes down. Gold starting the bottom, sniffing out that the 30-year is going to start outperforming the 10-year eventually. And then after that, gold breaks out, the 30-year outperforms the 10, and then it just rockets up. So I did this chart a while back, and I said, hey, man, is this a bottom? We're at 1.08, here 1.06. I have some bigger long-term chart pictures where there's a long rail about at these levels, and that is usually, like, I think in 2001 and 2006, there were important bottoms for gold when that 30-year divided by the 10-year went up. And here, that's what it was back then when I did this chart in July. So here we are today.
I got a question, or maybe you know this, maybe you don't. So when the 30-year, the way that I view it is the 30-year is more of a fixed rate, like it doesn't move as much as the 10-year. And what we're seeing here is when the ratio changes between the 30 and 10, that the 10 is actually dropping at a faster pace than the 30, I think, in that ratio. So what happens is it goes up and up and up and up, where the 10 years outpacing the 30-year. We get to a point where they kind of peak out, and then the 10-year starts dropping faster than the 30.
Yeah.
And I think that's when gold goes ballistic. So I think that the inflation expectations are lower in the short term, and these two are moving against each other. I'm just trying to explain how this works, and maybe a lot of people haven't thought of, maybe haven't thought about it that much, but I was looking at it earlier trying to think, like, why. I mean, that is the right market condition for gold and silver and all these to take off. But I'm just trying to think, because it's almost always on the back half of a commodity bull market that silver and gold really start to take off. What that means, and what we've seen, is a large increase in the 10-year yield, just racking up higher these past couple of years, which is very correlated with oil. And then I think at some point maybe it comes back, and then there's fears that creep back into the market. Maybe fear of inflation, whatever it is.
Well, yeah, or like a recession, and then they're starting to price in rate cuts, and then shorter term real yields, the real yields drop even more. Gold has to price in the monetary imbalances that they're going to have to do. And you're right, if a recession, oil might take a little hit. Here it is today, guys.
Yeah.
So I don't know where it is today. I think it was at 1.08. I think it pulled back to 1.07 on the 4-hour chart. So that bottom I showed you that I was eyeballing, it was back here, actually, that first chart I showed you. So it had time to go all the way back down and then all the way back up, higher low, beautiful base. So it looks like it broke out on the 4-hour chart. It's a 4-hour chart, but we haven't had a break.
Head and shoulders.
Yeah.
What I see.
And that pattern has been there since, it's been building out since March.
Yep. So we're breaking that to the upside, and that the 30-year and the 10-year, that ratio is highly correlated to the price of gold, the movement, correct?
Exactly. And that's why I overlaid the price of gold, guys. So here, what in 2018, you see here's the bottom that on the 4-hour chart, gold goes down, it makes a small base, it breaks out of this this base, and then there's a longer term trend line, it breaks out above, retests it, and that gold went from 1150, 1175, it went all the way to 2000 in this run, guys. Or did it? Is it that one? If it's not that one, it continued up until 2020 when it did above all-time highs. But here's a missing piece. So today we're breaking out the 30 versus the 10-year, fine. But gold hasn't broken out of its small base. So I'm still waiting for that to see if, one green light, to get those two other green lights, I want to see gold breaking out of this formation here. And especially, we want to be beating SPX. You want the capital flows to go to really, in a more definitive way, leave SPX in favor of gold, like it did back in 2018 on this move up. And it's not quite, it hasn't quite done it yet, guys. It's very close. So right now, today, SPX is going up. Everybody's happy. Bitcoin, everybody's going up. But when the dust settles, I want to see a more sustained run in gold and SPX either drifting sideways. But people have to remember the SPX broke down versus PPI. So I'm expecting reality to come back creeping in and those inflation pressures to subdue still that enthusiasm that the US equities are having today. But this is definitely good as a jolt to for the precious metals, because once gold breaks out versus SPX, silver's going up, like uranium, you name it, it's they're gonna get a move up.
So yeah, the 30 versus the 10 is the first thing that typically breaks, if I'm looking at that right, or it's very close. And if that's broken, that's kind of our leading indicator that gold should follow. Is that a fair statement?
Yeah. Well,
yeah,
I trust gold the most. So if ever this is a whipsaw, we want gold to really confirm. So I'm going to pop up the gold chart. 1% up. So here's the analog move. I think it broke down here. Gold broke down here. So look, this is a nice swing, guys. Above, by the end of the month, this could just be a higher low here. So I'm waiting for gold to, and we're probably gonna have to zoom in on the smaller time frames to see actually the turn. But this is getting right here, even here, guys. If ever we get a daily close above 1734, that's gonna look pretty sweet, guys. And after that, we're gonna look at this trend line to break. And the next challenge is gonna be, so we won't have to wait until gold goes back to all-time highs. A lot of people, they wait for gold to go to all-time highs to jump in. Oh, no. When you build the evidence, SPX broke down versus PPI, and the 30-year dividing by the 10 is breaking out from a historical bottom where gold usually bounced. And if gold breaks out versus SPX, for me, I'm not going to wait until all-time highs to say I'm getting back in, right? These descending trend lines are going to get me at a lower price point because I know it's lower risk, higher reward at that point. Can this fail and go back down? Sure. But right now we're sitting on critical support. We're bouncing. So once I get above this line, I'm going to get super bullish. And if I really want to be defensive, I'm going to wait for a close above 1800 to go long, but I'm not going to wait until we hit 2000. I'm not going to wait another 13% to get to 2000. By then, it'll be too obvious, guys, that we're moving up there.
Yeah, but I mean, you could also look at the mining equities and see if they're breaking their downtrend line too, right? Like a GDX or something like that. Or,
yeah, ASA. Look, oh, nice.
See,
ASA's breaking out here.
That's what I'm saying.
That means it's leading. That's my ASA chart, guys. You know what? I'm dumping JDX and all the other ones. ASA is the oldest precious metals fund. Nobody's talking about it. It has data since 1968. And I just love it because I get some good TA on it. Of course, it looks like the JDX, but that's this is leading.
Yeah. So what happens is a lot of the a lot of people position in the mining companies first, and then they move the price of gold, so everybody else jumps on the train.
This is very
It's like
bullish.
positioning before.
So right here, Andy, if I do some fast TA there, there's a vacuum here. So this thing should rocket up to 16 bucks
Mhm.
before trying to do some type of pullback there.
Let's hope so.
Yeah, this is I should be buying this stuff there. What? Yeah, well, something like that, you know. And then after that,
Yep.
It's never a straight line, guys. You see, this is reasonable, right? So you could let it go here, and then don't get all giddy. Just wait for the retrace here. But this bottoming pattern is probably going to be pretty aggressive, right?
Yeah, we'll
So,
see. I
yeah,
just
so
saw
that's
the mining companies. They kind of they're looking like they're trying to break like an
wow. Look
XAU
at
to
that.
gold ratio,
Yeah,
or a SILJ looks really good. Yep.
yeah, it's breaking out here. SILJ is breaking out.
Yep.
JDX a little weak. JDX has some Newmont in there where they got destroyed recently there. Look at that. JDXJ looks nice.
I know they look good, don't they?
Geox, I love Geox. Nobody's talking about this one. That's the Gold Explorers. I love the CTF. So yeah, they're looking great. As a whole, they're looking awesome there. Yeah, that's pretty sweet.
I was looking at the mining companies, and then I said, wow, I saw your chart on the 30 and 10, and I was like, man, this looks like it's ready to go soon.
Well,
Like it's ready to go.
that's the difference between this one here. Look, I'll just do an example, guys. I'll just pop up the XA TNX, no, TYX. Jesus, Pat. TYX divided by TNX. And this is the difference because back here, you see how we had this low here? This was just the first reaction high in the 30-year, in the 30 divided by 10, right? So that it subdued the fact that I was discovering this resistance here. That didn't work out. But now this is huge. I call that hidden bullish divergence. So, right, that's breaking out here. So that's telling you that this one's for real. This bottom here, I'll be more precise, guys. Look at this one here. I'll put a line where it started turning up here about, okay? JDX started turning up. This thing has not broke, well, yeah, it did break out from this small base here. Yeah, but it faltered and then it created a bigger base. But now this one's bigger base. And that one, well, it looks good.
Well,
if this line breaks out, now we have a 2-point on this trend line here. If that 2-point trend line here, we're going to do probably a small reaction here at the JDX. And if it could do something like that, do a small reaction and then bust up, then you know it's legit. So yeah, it's looking super good, Andy, there for a rally, definite.
Yep, short-term rally. But I like the inverted head and shoulders on the 30 and 10-year yield that you had.
Yeah.
I think that is those are pretty reliable patterns. I like them. And when it's breaking like that, if that's a leading indicator of what gold could potentially do, and the mining companies are also validating that, I'm going, all right, this looks good here. Just in general for the mining companies. Because that looks like a bottom in that ratio there.
That's a bigger, it's a bigger pattern here in play there than it was back here, right? Here was just a small double bottom, very tight. It could have been a bear flag, but now left, right, left, center, and right. So
an inverted head and shoulders usually is a pretty reliable pattern for a bottoming, for a bottom. We saw, and I'll just throw a random company out here. BTU has the same bottoming pattern that looks exactly like that ratio does. And I know it's a coal company, but it had a very similar pattern to that.
Technical analysis, it applies to anything. It's a psychology, capitulation, reaction move, but there's still a lot of overhead sellers that need to break even. You know, they're going to sell on the next rally, then another capitulation, more selling. Then after that, this is the killer. When you do a higher low, that's what the takeaway of head and shoulders or inversed is: the low, a higher low, close to a neckline. This is like,
Mhm.
you know, super bullish there. It's contracting. It's, this looks great. And I'm just seeing here, there's a pull flag here. Pull flag right there, breaking out above that line. And it gives me a measured move all the way to this resistance line right here, guys.
Yep.
Isn't technical analysis beautiful? So yeah, miners could have a good run until the 30 divided by the 10-year starts stalling maybe here. Once it gets a 113, then we'll see what happens. But this thing
Yep.
should run now for I don't know how many days. How many days is
Yeah,
that?
if you look at the TNX, just straight up TNX, it looks like it wants to put in a head and shoulder top.
Yeah, yeah. I think we just looked head and shoulder stop, and there's a
Yep.
and then a rising trend line. So we'll see what happens. It looks destined, and what I have a feeling it wants to test this here. A lot of reaction points here. That it's gunning for this line, guys.
Mm-hmm.
So we'll see what happens here. Is it going to grind upwards? Is it going to falter? But yeah, I don't know, man. This is it's a nice turn of events. The DXY is starting to melt.
Yep.
Not that one.
DXY was turning lower.
Yeah, look at that
It
melting.
was interesting.
So that looks also like a pretty impressive top, right? Look at that.
It does.
Go off
It does.
top. Reaction high cannot make it. So if it closes below this line,
Yep.
It's and this is weaker than this because this is really like it really couldn't do it again. But that's a 4-hour chart, guys. So I'm not gonna get super too excited. But by the end of the month, and this is critical, there's a few days left in the month. And what's the beauty of and look, and this is why I tell everybody a few days ago, this was a green Marubozu candle all the way up here, guys. It looks super bullish or a week ago when, I don't know, when the DXY was at 109, there's like, oh my God. But you wait a week and I can't wait now. How many more trading days? I think two or three.
Mhm.
This could be an ugly denial wick, I call there, where the sellers come in and they just bring it back down, just like here on the USD, on the CAD. Look at these denial wicks here. Look at this denial wick. That was a huge important top here. And I'm pretty sure that USD CAD is just going to plummet. CHF, same thing. Look at two months. That's the third month of denial wicks. Here, Kevin's sending me live alerts about the NASDAQ. So yeah, is the NASDAQ breaking out? Jesus. Yeah, so we'll see. NASDAQ, we're going to see on the reaction high, but I'm not putting much hope in the NASDAQ sustaining this run there.
I think it'll come back up and then roll over.
Yeah,
That's what I think.
yeah.
It's a bull trap.
This one, yes.
It's a bull trap that's coming.
Yeah, like here, 2008.
Mm-hmm. Mm-hmm.
You know, this tells me that the worst of the U.S. equities meltdown is not even close to being done yet.
I think, well, if you look at the, what about the 2001? Because I think that's basically,
here.
It's very similar. Yeah, I think it's like that is where we're at. Time
Try to
wise.
pull back here.
Yeah, it's going to be something like that, where it pulls on back and goes sideways for a long time.
Yeah,
That's my guess.
Yeah. Oh, look at guys. It's bouncing on the 3-year moving average. So this is like either it makes it or it breaks it. Either it's 2019 and it runs up, but gold's going to tell us if there's danger. But look at, yeah. So I'm just wondering if that's going to hold. The NASDAQ did not hold. NASDAQ did close its month below its 3-month moving average. The Russell's below on the wrong side of that 3-year moving average. So the SPX is giving a tiny bit of hope for US equities. But yeah, we'll see when the dust settles there. I think after FOMC meeting, a lot of stuff happens, but that 30 divided by the 10-year is really telling us something, man.
Yeah, it is. Definitely. What about the S&P 500 in relationship to oil? Because I know you were looking at that one.
Yeah. So here's a historical chart. because we know the SPX broke down versus the PPI, so that's great. We know that happened. So what about oil? And oil is a big component of the PPI, but it's not as sustained, going up forever as the PPI. So here, let's look at the 60s and 70s. This angle here is what I call the sleep mode line. Many touches, but it's still very acute. But once that breaks down, you could still have a reaction move up, but the momentum's starting to, it's like you're running on fumes. And after that, it's less steep, then it breaks down again, many touch points. Then after that, huge drop, tries again, and that's a lower high, and that's all she wrote. That's the last best time to get in oil, 1972. And then look at that huge move for oil versus SPX. Here we have the 1980s run. And there's like a spike in oil in 1990. Was that the Gulf War? I see that on a lot of the charts there.
Yeah, I think so. Yeah.
But look at that, many touch points. Then after that, huge move up in favor of SPX outperforming oil. As soon as it breaks down, tries to get back up, even many months later, it's hitting a historical support, tries for another move up, lower high, that's all she wrote. The echo bubble, guys, the reaction high, that's when you test, that's when you know, is that thing going to go parabolic up on the reaction high? Because that move was already parabolic. So if it goes back up after the pullback, that's like more parabolic madness. But if it can't, that's it. Bubble burst. What happens after that? You break below the wall, previous resistance turns support. Now that become resistance. See, it can't, it tries to go back above. And then look, that's the bull era for oil around 2003 to 2008. It did great. And look where we are today, guys. Oil bouncing, SPX bouncing, outperforming oil today, or for during the past month, but it wasn't a mystery, guys. 1, 2, 3, 4. It's this rediscovering this trend line, putting importance into it. So this is a reaction. But remember here, when I showed you the more acute angles, there's already a breakdown in momentum in SPX versus oil. It happened already. So SPX tried to go parabolic versus oil, but after I broke down, landed on this historical support, tried to go back up, even here on this resistance support here, try to go back up, not even close, making the echo bubbles high. So right now, I'm just wondering, I drew this line, I'm just wondering how high this thing is going to go before plummeting. And once it closes below this line, sayonara, go long. This is probably going to be the last opportunity to go long oil in favor of SPX. So that's when it gets really, really crazy, guys.
Do you think it's possible that this ratio goes back somewhere to like 3, like it did those previous oil bull runs?
Yeah. So
there's a couple of times it hit 3 in history. Yeah, like in that general vicinity, or maybe.
Yeah, I'll hear. Yeah, for sure. Yeah, I never go to, that's the trap with silver. People, they always compare silver, the $50 peak. Yeah, but it didn't stay there long. But this it stayed quite a while below that area, right? So you had a lot of chance. So yeah, definitely
So,
this is a target. So a non-greedy target, guys, would probably be this region here, non-greedy. And if that busts through, then you could start looking at a 4 to 1 ratio. Jesus, what does that mean? That means if the SPX is
I'm trying to do the math. $2,000 or 2,000 SPX, $500 oil.
Yeah, and you know what? That's definitely possible. If they print so much money that to keep the SPX afloat at 4,000 or at 2,000, of course, oil is going to be worth more. There's so much more fiat chasing more and more scarce good, So I'm not afraid of $300 or $400 oil. It makes no sense being scared or saying it's impossible, it's going to break the system. People have to stop saying that. It doesn't make sense. There used to be $10 oil. We're at 100. It's like the whole system's not breaking down. It's just your purchasing power is going down the drain. That's what's happening.
Is there do you see some sort of megaphone pattern in here, perhaps?
Well, this is crazy. On the linear scale, the volatility that they're creating is insane. Look at that.
Yes.
That is insane volatility created since in the 1970s and amplified 2000. So that thing could go massively, maybe on the kickback here, but yeah, there's here.
Yeah, like it almost wants to go back down to 0.
Yeah, well, we know it's like probably, yeah, like we can't get too greedy with ratios, right? It's
Yep.
going to go down here somewhere, but it really wants to go retest these historical low watermarks there
Yeah.
before doing another craziness in favor of US equities. But maybe in 2032, that's where I think maybe it starts to soften up there for and then after that, US equities do a crazy melt up in the 1950s, hyperinflation. But you know what? Sometimes I do that. But what happens to these megaphone patterns is sometimes you just can't continue this ever. They just do that eventually there,
Yeah.
like
Yeah.
they just pan out, and these spikes, they just don't happen anymore. Maybe this going to happen and it'll be more contained, and people, maybe this is what's going to happen going forward, right? And this is a thing. SPX in 2000 and 2020, those are, they might be bubbles that will never come again in US equities valuation ever again. That's possible. Like people think .com has never, when you adjust it for gold, has never regained its .com bubble highs, never. So look, it's possible that the .com bubble, and this is March Madness when oil went negative. If it didn't go negative, I'm not sure. Like it could have maybe be close to the .com bubble, undervalued, but this I'll put it on the quarterly to see if I could maybe hide those peaks. Even on the quarterly, it's doing it. Jesus, I'm on the yearly. I'm trying to hide here. I had to put it on the 6 months chart to hide that COVID spike.
Yep.
But this is US equities in bubble mode. It doesn't make sense. So
yeah,
if people want to know if their oil is cheap, it's still cheap relative to US equities. It still is. That's what the chart's telling you. Until it reaches down here, oil is still cheap when you compare it to US equities. Am I wrong? Yeah, that's right. That's
yeah.
correct.
Oil is still cheap as long as it's high on the ratio. Oil's cheap. Yep.
Yeah, exactly. So I think that's pretty much we've covered
yeah,
good stuff, man.
There. Okay. Well, let's we can end it there. Thanks for for coming on, Patrick. I really appreciate it.
And you woke up my mind, because I thought premium over spot was still like $1 or $2 there. And we went on Kitco before, and even these small, tiny koalas cost a fortune now. It's like, I wonder if somebody has data to the Kitco price of, like, I'd love to chart that, because yeah, I have to deep dive that whole Andy there. I didn't know the premiums were so high. I thought it was just like manipulation guys saying there's manipulation, and I was trying to dismiss it, but the prices are high. So I don't know why, but they're high.
Yeah, they're like $5-6
yeah, it doesn't make sense. Who's buying that stuff at that price? It's crazy.
I don't know. I don't know what's going on there. So, all right. Well, thank you for coming on, Patrick. Really appreciate it.
Yeah.
If you guys made it to the end, maybe put in the comment section, bad charts rules, throw that in there. Put that as a comment if you made it to the end, and thank you for watching.
All right, man. Take care, guys. Bye, Andy.
Yep. Bye.